And welcome back here to Live Now from Fox. I'm Andrew Kraft. Thanks for being with us here. All right, in the meantime, let's move on to more of these top headlines, especially on the U.S. economy. Well, the Fed met today. We heard from Chairman Jerome Powell, keeping interest rates steady, unchanged for a fourth time in a row. Well, what does that mean for the overall health of the U.S. economy? Fox News' Connor Hansen has more. And there's another dimension to this ongoing social media war between President Trump and Jerome Powell. Powell was asked about his relationship with the president at the meeting today. All of that and more. But first, Connor Hansen.
Despite elevated uncertainty, the economy is in a solid position.
The Federal Reserve has held interest rates steady for the fourth straight time. Rates have sat around 4.3% since the last cut in December. Inflation has been cooling all year, but Fed officials have been waiting to see how President Trump's tariffs play out.
We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
The president has repeatedly expressed his frustration with Fed Chair Jerome Powell.
It's a shame. This guy, do you ever have a guy that's not a smart person and you're dealing with him and you have to deal? He's not a smart guy. He's worried about inflation.
The war between Israel and oil-rich Iran is also creating uncertainty, and Senate Democrats debating the president's huge tax cut and spending bill argue it would spur even more inflation.
This new analysis says that the deficit impact on the country will be even bigger, now looking at $3.7 trillion in additional deficits, that the bill is going to increase interest rates.
Despite recent rate cuts in Europe going much further than the U.S., the Fed is required to be independent.
I strongly feel that the Fed's independence is critical to the integrity of the dollar. That we can say, there's no political interference here.
The Fed still expects to have 2 more rate cuts this year. Its next meeting will happen at the end of July. In New York, Connor Hansen, Fox News.
Connor, thanks so much. All right, in the meantime, let's look under the hood of what was said today by Chairman Powell. We're going to do that with our friend and colleague there at the American Institute for Economic Research, Lydia Mashburn Newman. She joins me. Lydia, so good of you to be with us, and it's good to see you here. So, no change to the federal funds rate, the interest rate here. Why? We've talked about this. President Trump wants these interest rates cut. Jerome Powell still holding steady. Is that what you would have predicted?
It was definitely predicted, and it was predicted by a number of analysts. Pretty much everyone. The expectation was holding pat for this meeting and likely to hold pat at their next meeting in July. And any change in rates likely wouldn't come till their September or maybe not even till later in the year. This is expected, largely due to the uncertainty around tariffs. And Powell indicated this in his remarks and in the press conference that the committee members are worried about how the tariffs may pass through and not just be a one-time price increase, which is what a traditional tariff would be, but tariffs of this magnitude may end up flowing through the entire system and end up causing an anchoring of inflation expectations by the rest of the economy, especially consumers. And that's something the Fed is very, very worried about. They did update their economic projections. They update this every other meeting. And basically, they show lower growth potential, higher inflation potential, and a tick up in unemployment for the remainder of 2025, which is essentially a stagflationary environment, that the tariffs are basically making the Fed think that we may end up in a stagflationary environment.
I mean, I have to ask, though, Powell said this on tariffs. He said, we hadn't expected them to show up much by now, and they haven't. Why haven't they shown up yet?
So he mentioned this a little bit, that we thought we'd see a little bit more, but he seemed to indicate that the delay pushing back Liberation Day tariffs to the new July 9th deadline is kind of showing that's likely when we would see it. And he indicated that it wouldn't be until the end of the summer that the Fed would likely take in enough information that they could make a decision to change their policy stance. And I think you saw the markets kind of dip right around the time he made that remark, which basically clarified, yes, if we're going to get rate rates this year, they will be later than market participants would like and that they had hoped for, but not necessarily further than what they had expected, because they've come to expect that the Fed is going to be a lot slower to move off their higher rate environment.
You know, Lydia, our conversations, it's always me asking you to look into the future, so I know it's a difficult prospect. But I have to ask, I mean, for American consumers specifically, are they expecting, should they expect any rate cut this year? I mean, if they're going to buy a house, a car, or a big purchase, should they hold off? We haven't had one this year yet.
Yeah, so a lot of consumers actually moved those large purchases forward. That's where we saw some spike in consumer spending earlier in the March and even earlier months, basically from December on, where they moved those purchases forward in order to avoid the tariffs, but also any other uncertainty. And in terms of making those larger purchases later down the road, we have other pressures. It's not just the Federal Reserve stance on monetary policy. The Fed has an impact on short-term interest rates that eventually flow through to longer-term interest rates. But for consumers, especially for mortgages and cars, they should be really looking very closely at government spending, because it is the government 10-year Treasury note that most of those rates are built off of. And while the Fed can influence those partially, they are largely in the position they're in today at 4.5% roughly, up and down around that area, largely due to the outlook of the government spending and deficit. And the big beautiful bill is, I think, a cause for concern, and the consumers should be concerned about that if they are thinking about making large purchases and what effect that may have on those rates for those large purchases.
All right, we're covering a lot of ground here. Let's focus on some more of these key metrics and data points: GDP growth, inflation, the number there, but also the unemployment rate. What did Powell say on all of those? Is he bullish or not, or bearish on that prospect?
Yeah. On the unemployment rate,